Hi, I'm Devang Mehra from the Financial Analyst, and today we'll be discussing the Morning Star Pattern. I'm presuming that you've already done our lecture about the Evening Star. If you have not done, you can always go check it out. The link is in the bio.
But before we get started, make sure you follow us on Instagram at The Financial Analyst, and also do not forget to join our WhatsApp group, the TFA Daily, to be updated with the live stock market news.
Today we'll be discussing the Morning Star, which is just the opposite of the Evening Star pattern. It is a three candlestick pattern, and it signifies that there has been a dramatic fall in the prices, and now the sun is about to rise, so prices start making new highs. So let us get started. The Morning Star is a three candlestick pattern that I've already discussed. Our first condition is that there has to be a prior downtrend. So prices have been making new lows, and the first candlestick, it is a three candlestick pattern that we have discussed. The first candlestick will be a very big red candlestick. This shows us that the sellers are still in control and the bears, they are pushing the prices lower. So there has to be a very good amount of volume on this day to confirm that the downtrend is still in force. The second candlestick is a doji or a star, and this shows us that there is indecision in the market. If we can see from this candle, the price is opened at this level. It went all the way down, which is indicated by the shadow, and at the end of the day, it closed over here. Just a very minutely up level. So this shows us that there is a very heavy indecision on the day of the doji. So the buyers and the sellers are now agreeing at an equilibrium price. So the sellers are now willing to let go of the selling pressure at this price level. So this will act as a very important support for the stock. And the next day, following the doji or the star, will gap up and it will be a bullish day. Ideally, the candle has to close into the first day of the red candle. It has to close into this day, but it is not always necessary. Our condition should be that it should be a very good bullish day, which is followed by a very large volume, which shows us that now the sellers have lost control of the market and the bulls have stepped in, and prices will rebound from the support level to make a new high. So let us see the conditions. The first criteria is that there has to be a major downtrend or a minor downtrend. The body of the first candle needs to be black or red in color, which shows us that the downtrend is in force. And the second candle is a doji, which shows indecision in the market. The third day should be opposite in color of the first day. So as we discussed, the first day was red in color. The third day needs to be green in color, which is showing us that the bulls are now back in control. So as we discussed, a prior downtrend. First candle should be red in color, good volume on this day. Second needs to be a doji, the color is not important. And the third should be green in color, which is opposite to the first candle. And it should close, it should be a large candle and should ideally close into the first candle. So the signal enhancement criteria are as follows. The long length of the red candle and the white candle shows us that there is more strength in the reversal. So, if the red candle is a very large candle and the green candle is a very large candle, that shows us that the reversal is imminent. The more indecision on the day of the doji shows us a better probability of a reversal. This means that the longer will be the shadows of the doji candlesticks. That shows us it will be a much better chance to reverse and prices to start rising. So ideally we must see a very small gap between the open and close price and the shadows to be very large. A gap between the first day and the second day will give more chances of a reversal, and a gap before and after the star day is also desirable. So the last criteria is that there always has to be a gap between the first day and the doji and the doji and the third day. This is a very important criteria and these candlesticks should not overlap. So now let us get into the practical applicability and see if you've understood the pattern. This is the chart of Dabur, one of the leading FMCG companies in India. So I will just zoom it for you. We have seen there has been a downtrend. This is a good downtrend from February to the end of March. Prices start making new lows, and at the end of the downtrend, we see a very large red candle. So the first condition is downtrend, it is satisfied. Second condition, red candlestick and a very large candlestick. Second condition, there has to be a doji or a star needs to be formed, and it should gap down, which is being satisfied. And the open close price is almost the same, as you can see, and there are very large shadows, which shows us that there is a lot of indecision on this day. The third day is a green candle, and it is closing into the red candlestick, which shows us that a reversal is imminent, and all these candles are gapping. This candle is gapping down and the third candle is gapping up, so they are not overlapping. So all the conditions are satisfied, and we have seen that the volume has also started rising, showing us that a reversal is imminent. So we can easily enter the trade over here. And if you have seen our previous module of the evening star, we can enter the trade at the morning star, and we could have exited our trade at the evening star, which shows us that the first is a green candle, second is a doji, and the third is a big red candle, and prices start to make new lows. So you can use these candles in conjunction to get a very good result of when to buy, when to sell, or when to hold. So let us discuss another example so that you can get a good clarity in this topic. This is a chart of State Bank of India, one of the public and nationalized banks in the country. So in this example, you can see that the trend has been up, but at this point on 19th of March, there is a very minor downtrend. So as I discussed, there should be a major downtrend or a minor downtrend. So in this example, there was a minor downtrend. Our first candlestick was a red candlestick, a very big red candlestick. The second candlestick, which is gapping down, is a doji, shows us indecision in the market. And the third candlestick is a green, very large candlestick, which is closing into the red candlestick. And it is closing very high, well above the half point of the first candlestick. So all the conditions are being satisfied. A reversal is imminent. There is a very high volume on these days, which is showing us that prices are going to make new highs. So this is what is a morning star. So make sure you see all our videos of candlestick patterns so you can use them all in conjunction, because you will be seeing or witnessing a lot of candlestick patterns happening in the daily or the weekly charts or the hourly charts. So if you have good knowledge of these patterns, you can take a very informed trade and you can maximize your returns. So I hope you liked the video, and if you want to see any of our other videos, be sure to check out the links in our bio. Thank you. I hope you have a nice day.
Hey, hey, hey! Why stop now? View our other videos to learn more. But before that, don't forget to join our WhatsApp group. Please do like and share our videos, and also subscribe to our channel. Hit the bell button to never miss an update.